Folks, welcome to Cryptocurrencies Buy or Bust. Now, that may sound like I have an answer at the end of this video to that question. The answer is, I don't know. But the purpose of this video is not to bash cryptocurrencies. It's not to advocate for them either. All it's simply to do is to take it from a different perspective from how other people are analyzing the charts of the cryptocurrencies. And what I'd like to do is take it from the standpoint of how this setup of how the cryptocurrencies appear now on the charts. I want to compare them to how the NASDAQ and the semiconductor sector appeared back in 2000. I think that's a fresh look at how these charts are trading, and it'll allow you to appreciate whether or not, in fact, we are in a bubble or whether or not we should be buying the cryptocurrencies. And I would encourage you to leave a comment either on YouTube, or if you watch this on StockTwits or Twitter, follow me there, leave a comment, and I'll definitely get back to you. Let's have a conversation about the future of the cryptocurrencies. Let's get to it. In 2000, I was trading the semiconductor sector, in particular PMC Sierra. It's no longer around. It was bought out. And I was trading naked puts, which is a very high risk way of generating cash flow. And I did for a couple of years do very, very well. And I was just trading only a few stocks, PMC Sierra being one of them. And I had been through corrections before in the market, but had never been through a bubble. But I was in one back during this time frame. This is a chart of the NASDAQ from 1997 to 2000. Now, I'm not going to be the guy that sits here and says, you know, you need to sell your Bitcoin tomorrow because it's in a bubble. I'm not going to do that because I believe that, frankly, Bitcoin, Ethereum may in fact move higher because there are many points during this journey higher in the NASDAQ during the 2000 bust, or just prior to the 2000 bust, where you could have said it's a bubble, you have to get out. Even back here in 1997, where Alan Greenspan had stated that there was irrational exuberance in the stock market. Frankly, the party was just getting started when he said that. So had you listened to him and exited the stock market, well, then you would have missed out on this entire journey higher. So what I'm here to talk about are the technicals. How do you know when the party is over? And how do you know when to build on your positions when you know that you have a stock, an index, a commodity, a cryptocurrency that is in a parabolic move higher? Now, in the case of the NASDAQ composite, you had a psychological resistance level. Everybody was clamoring about NASDAQ 5,000, NASDAQ 5,000. We hit NASDAQ 5,000. We stayed there for all of about a week, and then we gave up all those gains. That was the top. And you had tremendous amounts of what Wall Streeters call dumb money. Meaning, people who wouldn't ordinarily trade stocks, they were talking about it around the water cooler at their jobs. And everyone was an expert. The word of the day was buy the dip. And I think that you're hearing the same thing with regard to the cryptocurrencies these days. In fact, I had my sister-in-law, who's a very great girl, but she called me up yesterday, and she's a hairdresser, telling me that she just bought Bitcoin. I asked her why. And she said it's because my son, who's in his first year of college, said to buy it. And while my son is very intelligent and my sister-in-law is very intelligent, they are not professional traders and know little about the cryptocurrency arena, yet they are speaking bullishly about it. And in one case, my sister-in-law put money into Bitcoin. So they're willing at this point to just step in with no knowledge whatsoever and buy up Bitcoin, Ethereum, whatever. So what is old is new again. And I can assure you, as a contrarian, that my number one contrarian indicator is this, is when I see people not ordinarily involved in the stock market or talking about gold, all of a sudden clamoring about you have to be in gold, you have to be in the stock market, then I know the end is near. Now, does that mean you can't make money in Bitcoin, Ethereum? No, of course not. You certainly can, but you need to be aware of the environment that you're in right now. Now, the NASDAQ as a whole really doesn't align well with how the how Bitcoin and Ethereum look right now. What I'd like to do is go to the chart of the semiconductors, which is far more correlated to how Bitcoin is looking right now. But this is a chart going into the 2000 bubble of the semiconductors. Now, I was trading the semiconductors. I can't tell you how to build one. I didn't know the science behind a semiconductor, nor do I know anything about Bitcoin, to be frank with you. But I am an expert on the charts. So this chart here of the semiconductors aligns very well with the NYSE Bitcoin index. And you can see that we are trading above the third standard deviation Bollinger Band. Folks, if you're not familiar with technical analysis, it's not supposed to be here. I'll spare you the technical jargon. It's not supposed to be here, and it will not stay here much longer. We are going to get a severe pullback. Now, is that the crack that breaks this bubble? I don't know. I don't know. You could have looked at the semis back in 2000 and said that here in November of 1999, well, similar setup, trading into the third standard deviation Bollinger Band. Was that the bubble top? No. In hindsight, it wasn't. You had a lot more to go. You could have said the same thing here in January of 2000, and then again in February of 2000, and then again in late February of 2000, and then again in March of 2000, and that's when it all ended. So in hindsight, on the semis, what was the proper thing to do to make money in the semis? It was to wait for the reaction of the semis to the fact that it was overbought. It pulled back to its lower band of the rising up trend channel, and then it would resume its trend higher. How did we know that the game was over for the semiconductors, despite the fact that we had a lot of enthusiasm and cheap money chasing the NASDAQ and the semiconductors higher? Markers. The stock market sent us signals. What were those signals that the market sent us about there being trouble for the semiconductor sector? Well, RSI had reached a peak of about 90, which is extremely overbought for an index, even for an individual stock, but for an index, it's amazing that we got that overbought. And the fact that we had RSI 90 coinciding with the fact that we had the semiconductor sector leaning into its third standard deviation Bollinger Band, that was a recipe for disaster because it simply was unsustainable. It was not going to be able to maintain this trajectory. Now, just to point out where I was during the week that we peaked out, I was walking down the street in Times Square, New York, and I was peeking in to the NASDAQ market site, which had just recently opened, and I was looking at the ticker that they had going, and I was watching for a new quote of PMC Sierra. I had just opened up a new trade. I sold the puts, the 165 strike at that point in time. Only a week later, it was at 255. I was watching the stock at its all-time highs. I had no idea that was the day. The party was finally coming to an end. And so we got our correction. And I'd love to say that I was wise enough to get out right here. I did not. That's me being honest, because I was still young, very, very new to the stock market, but I was about to learn the lesson of my life. I was fairly good with technical analysis, and I knew to watch out for a couple of things. One, watch out for lower highs and watch out for lower lows. And what had happened is that we did get our correction. Then we rallied back strong. And what I was looking for was a pullback and a break below the prior low. If we broke below it, I knew that the party was over. And we stopped out of our position on a break below, right here, below this lower low, which should have held. It failed. It did not. This bull flag formation was negated. And while we did rally back, I was wise enough to avoid re-entering the trade until we broke out above the prior high, restoring the bull run. It never happened, and fast forward, a major correction. So how does this relate to Bitcoin, Ethereum. We're going to go to those charts now. Let's go back to the Bitcoin Investment Trust. All right, so in keeping with the analysis of the semiconductor sector, you could have said back here in June of 16, the bubble is here. We're leaning into the third standard deviation Bollinger Band. Get out, and many people did. You could have said the same thing here, here. In June of 17 and most recently November, at current December. Am I ready to say that this trade is coming to an end and due for a correction? Absolutely. Why? It's because the same factors that I showed you, which brought the semiconductor bubble to an end, exists now in Bitcoin. Remember, back then we had RSI 90. We were trading up and above the 2 standard deviation Bollinger Band and into the 3 standard deviation Bollinger Band. Fast forward, Bitcoin to present day. We have RSI at 92.21 on a weekly basis. We are trading up and into the 3rd standard deviation Bollinger Band. Now, am I saying to go sell your Bitcoin and Ethereum on Monday morning? Absolutely not. For all I know, the price of Bitcoin could move dramatically higher from this point forward. Irrational behavior and a blind belief that there is no top is the very essence of a bubble. But let's run down 4 main elements that concern me, and I'll go from short term to long term. The futures market. To date, there hasn't been an ability to really short Bitcoin, but they do now on the futures market. And I can assure you that futures traders are looking at this chart, the same chart I am, plus many others, and they are watching with bated breath for another parabolic move higher, and they will sell into that strength. The technicals. The technicals are clearly flashing an overbought condition on Bitcoin and Ethereum. We've discussed that. RSI above 90 on a weekly basis. We're trading up and into the 3rd standard deviation Bollinger Band. If you're not familiar with technical analysis, I'll make it plain and simple for you. It's not supposed to be here on a technical basis. Expect a correction. Is it the top? Will that correction be the top? I have no idea. You'll know when we begin to make lower highs and then lower lows. That will be the signal by the market that the party is over. But until then, the path of least resistance remains higher. So call me a Bitcoin bull right now with a tremendous amount of cautious optimism. The third concern that I have are the ICOs. It seems like, and for people that aren't familiar with ICOs, initial coin offerings, I hear them being offered constantly. So what does that mean? It means that you have competition, new supply. Now you may be saying, Bitcoin only has 20 odd million Bitcoins and then they stop producing them. Well, that doesn't mean that they're not going to create new cryptocurrencies. So while Bitcoin bulls like to say it's digital gold, it's not. They're not making any more gold, but they are making new cryptocurrencies by the day. Reason number 4, and the primary reason why I've tried to avoid Bitcoin, is government. And this is what most millennials do not appreciate. The government is not getting their cut of taxes. That will not last. It's also a competitor to the US dollar, which is the world's reserve currency. And the thugs at the Federal Reserve and at the ECB, which I like to call central banksters, do not appreciate the challenge that these cryptocurrencies give to the US dollar. Lastly, you have the thugs on Wall Street, Jamie Dimon. These cryptocurrencies are a competition for their business. They have a tremendous amount of power in Washington. So what you're dealing with here is a lot of headline risk. So in all probability, it's going to be an announcement out of Washington that would allow futures traders to add to their short positions, and then you will see a top in the cryptocurrencies. Let's get to a chart of Bitcoin. We'll see how it looks relative to the semis back in 2000, the NYSE Bitcoin Index. We'll take a look at Ethereum. Okay, so here's a chart of Bitcoin. Bitcoin As I mentioned with the semiconductor sector, back in 2000, very, very similar, but honestly, this is worse. Because not only are we trading into, it's hard to see here, because they have the Bollinger Bands in green as well as these up candlesticks for the price action on Bitcoin. We are trading considerably above the upper band of resistance. 2 weeks ago, you saw a tremendous amount of profit taking as noted by the wick on this candlestick. You saw some the prior week, but nowhere near as much as the week prior to last. Last week we closed at the highs of the week, or very close to it. So a strong week. We have money flow continuing to rise. I see a new breakout here, in fact. We were making lower highs, which is not good when you're seeing the price action move higher, but we're now making higher highs. Same deal here for RSI. Now, RSI for Bitcoin at current on a weekly basis is at 89.16. Folks, it can go higher, but you have to anticipate a correction in the next couple of weeks. And I'll leave off with Bitcoin here with the fact that our volume bars, which were rising, are now beginning to decline. So that's not a good sign when you see that Bitcoin is making new all-time highs. So watch your volume. The lower these volume bars get, the less participation you're seeing on the part of big traders, institutions, and it's more and more mom and pop buying a couple of bits of a Bitcoin. Let's check out Ethereum. All right, so here's Ethereum. Again, we have the price action on Ethereum trading well above the third standard deviation Bollinger Band. And one thing that you did see last week, and it doesn't mean it's necessarily a top, but it's certainly a concern, topping tails. Topping tails is a sign of profit taking or shorts moving in. The last time you saw, actually there were 2 times before, you saw price action like this was back here in October when we rallied up into the third standard deviation Bollinger Band, flashed a topping tail. Then within 2 weeks, we had retraced all the way back down to the rising 20-period moving average, which acts as a really good support level. And prior to that, you saw it back here in June of 2017 when we rallied for the second consecutive week up and through the third standard deviation Bollinger Band and then pulled back and found support at the 20-period moving average. So what does this teach you? This rising 20-period moving average is acting as a rising floor for Ethereum. RSI is nowhere near as overbought as it is on Bitcoin because we only have RSI of about 80, so there's more room to run here. Now, back to Bitcoin for a second. Relative to Ethereum on RSI, Bitcoin is considerably more extended and vulnerable to a pullback. I think what's keeping Bitcoin afloat versus Ethereum right now is the fact that Bitcoin is more of a brand name known to the general public. And you're seeing a lot more, I'm sorry to say this, but as Wall Streeters call the small investor, dumb money moving into Bitcoin. And believe me, they include me in that phrase, so I'm not trying to be insulting and condescending. So my apologies if I'm offending anybody. Let's take a quick look at Ethereum versus Bitcoin. Now you can see relative to, this is Ethereum and price action relative to Bitcoin. You can see that of the 2 cryptocurrencies, Bitcoin is doing better with Ethereum lagging a bit. So it probably has more upside to go than what does Bitcoin. Now I know I'm going to get an inquiry about Litecoin. Let's take a look at that one. All right, so very similar price action here. We're well above the third standard deviation Bollinger Band. We have topping action. RSI is at 92. Wow. So Litecoin is even more extended on a technical basis using technical analysis than Bitcoin. So in closing here, folks, we've gone through the technical conditions of Litecoin, Ethereum, and Bitcoin. Litecoin is probably more susceptible to a sell-off. Then comes Bitcoin, then comes Ethereum. Now, while I've identified that we are technically overbought, that doesn't mean that the rally is over. What you want to pay attention to is history. History is very important. And on Litecoin, Bitcoin, and Ethereum, the rising 20-period moving average has acted as a fairly good floor. And it is rising. That's a good sign. So if you're looking to enter these positions, and I'll be providing guidance to members regarding good entry points for all three of these cryptocurrencies, you'll want at a bare minimum to look for a rising 20-period moving average. The cautionary flag I will have for everyone. If you're not one that is good at viewing charts, get a service such as mine that will help provide you guidance as to how the charts look, or start learning the charts on your own. And what I would be looking for here is very, very simple. I am looking for a reaction, and that reaction is fairly soon, and it will be to the downside for all three of these currencies. Will it be next week? I'll be honest, I don't know. Bubbles are bubbles because they are fueled by rampant speculation. They can move higher. Will it be the first week of January? I don't know. But what I will be looking for is a reaction to the downside. When we get it, I'll be looking for a rally back. Money can be made to the upside on that rally back. The question then becomes, if we get a pullback and we find support at, let's say, in this case, $200 per share on Litecoin, and then we begin to rally, do we take out prior highs, and then you have a continuation move higher, and from there, Lord knows where any of these cryptocurrencies could go? Or do we rally off of that $200 level and then put in a lower high? As I always teach members, the test is always at the top. If we put in a lower high and then take out the prior low of $200 per share on Litecoin, well then, the path of least resistance has now changed from being up, as it is at current, to then being down with lower highs, and then on a break below 200, our hypothetical support level, to new lower lows. And you do not want to go buying Litecoin, Bitcoin, or Ethereum when you have a stock chart that is making lower highs and lower lows. That means that the shorts are in charge in the futures market. You do not want to fight those guys. And that's it for my analysis of Bitcoin, Litecoin, and Ethereum. If you have any questions or comments, leave a comment in the comment section if you watch this on YouTube, or leave a comment on Stock, Twitch, or Twitter if you're watching the video there. And that's it for this week, folks. Everybody have a really fantastic holiday. Members, we'll continue to track not only the stocks in the stock market, but the cryptocurrency arena as well, because it's becoming a very, very interesting trade, and we will certainly be a part of it. Again, happy holidays and be well. Have a profitable trading week.